to Retire Smart Maryland. My name is Cynthia Defazio, and I'm joined today by Prashant, Sabapathi, and Ozer Culhagil of Elite Income Advisors. Prashant, how are you today?
I'm doing great, thanks. How are you?
I am fantastic. Thank you so much for asking. And Ozer, how are you?
I'm doing great, thank you.
Good, good. I'm so glad, and I'm so happy that we're all together again today in the studio, because I know time is flying, and you're so extremely busy, and I just can't believe how fast the weeks go in between from when I see you from one episode to the next. So thank you for squeezing it all in. Prashant, how are you making time to do everything, you and Ozer together?
Well, you know what? I actually don't know. I mean, we're just busy as ever. I'll tell you what it is really, is we have a great support team at the office that really empowers us and allows us to do what we do best, which is helping people plan, you know. And so we have a great client services team in the office, Jill, Taylor, in the office. We have Larson in the office as well, helps a lot with our new business and our transfer, moving money around stuff. Nick's in the office as well. So we wouldn't be able to do what we do without having a great team, and so that's how we're able to make sure that we're staying the most efficient that we can be in terms of how we allocate our time, which is really focused on the people that allow us to have a practice, which is our clients, which is great.
So it all comes down to teamwork and clients together.
That's right.
Perfectly cohesive. So today's show, I definitely want to spend some time talking about big topic, elephant in the room, if you will, taxes in retirement, because it seems like people have questions about this subject no matter where you go. People are talking about taxes. You can overhear them in lines at the coffee shop, in the bookstore, what have you. Everyone's concerned about taxes and where they're going to go, specifically in retirement years. So let's talk a little bit about taxes in retirement. Ozer, how important is it for someone to plan properly for taxes in retirement?
I think it's very important because, you know, when we look at it, what the taxes was 8 years ago and what is going to be in 3 years. And we talked about this so many times, like back in the days. And when I looked at the 2000, the average tax rate is about to be 28%. And after the, you know, the job, you know, cut acts and everything, then went down to about 22%. And that, you know, rule is going to be changing in 2025. That is going to go back to what it was. We don't know exactly what is going to happen. But, you know, I don't want to say we are hoping, but it is going to be higher than what it is today, because if you ask whoever in the economy, they're going to tell you this is the lowest taxes we have ever been in the United States.
Yeah, it's been a while since we've seen taxes this low. And I think one thing to consider is not all income is treated the same. Different sources of income have different taxes that are assigned to those sources, right? And I think what's really important is we hear for years that we're supposed to remain diversified, right? How important is it to have a diversified portfolio? And I think people think of diversification, and rightly so. They think of, I should have a large mix of investments to weather the financial storm. And I think that's really important, but diversification is more than just investment diversification. One thing we talk about is tax diversification. Not every retirement account is treated equal. Some of those accounts, you have to pay taxes on all of it. Some of your investment accounts, you only have to pay taxes on some of it. And then my favorite, there's retirement accounts out there where you don't have to pay any taxes whatsoever. So being diversified is not just about diversifying investments. It's also about diversifying how much tax you end up paying when you get to the retirement phase of your lifetime.
Wow, let's talk a little bit more in depth about that. I have to ask you, Prashant, Social Security, is that something that's taxed? Because that's something that I definitely want to speak about today.
Yeah, so huge myth out there is because I've paid into Social Security, which by the way is a tax, right? They hit you with the FICA for Medicare and Social Security. A lot of people think because I'm getting taxed on my income, I don't pay taxes when I actually receive Social Security. You have to be really, really careful about this. You absolutely can pay taxes on that Social Security income. Now, it's going to be different for every person out there. We've seen people that receive their Social Security 100% income tax free, but we've also seen people that pay taxes, income tax, on up to 85% of the Social Security that they receive. So think about that. You have some people that pay no tax on their Social Security, some people that pay tax on a large percentage of their Social Security, and that's why we say not all incomes are treated the same. So with Social Security, you absolutely could end up paying federal income tax on a portion of your Social Security. Your job is to try to minimize that portion that you're actually paying taxes on. That's what working with a really good specialist can ultimately help you potentially do when you hit that next phase of your life.
All right, Prashant, thank you. Ozzy, what about retirement account withdrawals? Let's talk about taxes on those.
Yes, so when we look at the retirement accounts, and if we are talking about the TSBs, 401ks, 403bs, some of these accounts is actually what we called is Roth. And if you have a Roth 401k, because we do know some of our clients has it, if you do have a Roth 401k, that means that you already pay the taxes, then you're not going to pay taxes on this. But if you have the traditional IRAs, traditional 401ks, 403bs, and the TSBs, that you have not paid any taxes, and when you start taking withdrawals from these accounts, these are taxed at the ordinary income tax rate. What that means is it's equal if you are working or not, it's going to be taxed at the same level because it's an ordinary income. You haven't paid the taxes yet, and Uncle Sam is here. Knock, knock. I'm ready to collect the taxes now.
Surprise.
That's right. That's right. Yeah.
So all of these things, Prashant, wow, we're talking about planning for retirement. Obviously, tax planning is a huge component to think about when you're looking at someone's overall retirement picture.
Yeah, and before we get to the break, I want to talk about the distinction between real tax planning and tax preparation, right? A lot of times people say, I go visit XYZ company and they prepare my taxes every year.
Yeah.
So yeah, I'm doing tax planning. And I say, no, wait, we got to wait on that.
Yeah.
That doesn't necessarily mean you're doing tax planning. It means that you've engaged with someone to do tax preparation. What the difference between the two is one is looking out the rear view mirror and one is looking out the forward windshield, right? So tax preparation is looking at how last year turned out to make sure that you pay what you owe to the federal government. Tax planning is forward looking. What steps can we take today to potentially mitigate or even eliminate the tax liability that we may face in the future? The issue is a lot of people think they're doing tax planning when they're really just doing tax preparation. And so when you work with a specialist, like in our office, we have a certified public accountant. She's done corporate accounting for the better part of 15 years at really big firms. And then what we did is we brought her over just to work specifically with our clients. So when you come to work with Elite Income Advisors, you have access to a really professional CPA who can help you understand how to proactively plan for your taxes in the future. So what I would love to do is open up our phone lines right now. That phone number is 833-308-5200. Now, when you dial this number, you will be able to schedule a complimentary, no obligation visit with our team at Elite Income Advisors. When you come in to visit with us, we are going to talk about your tax situation. We'll talk about what I call the tax domino, and that's the fact that you have required minimum distributions that impact your tax situation in the future. We'll help you determine how much of the Social Security benefit that you actually receive is taxable. We'll see whether or not you have any tax preferred or tax free income built in to your retirement income plan. If you've never gone through that exercise before, it is something that every single person out there can benefit from a conversation on. It starts with that phone call, 833-308-5200. The phone lines are open exclusive to our TV audience for today's show. If you can't dial the number right now, just make sure you write down retiremaryland.com. You can book an appointment by going to the website. You can also pull out your smartphone and scan the QR code. I'll tell you what, we've made it really easy for people to get those appointments. All you have to do is call or go online right now.
Prashant, thank you so much. And Ozzy, thank you so much. To our viewers at home, the number to call is on your screen, 833-308-5200. We realize that you have a lot of questions about how to plan your perfect retirement. probably some questions about taxes in retirement. Prashant and Ozzy have the answers for you. Just go ahead and pick up the phone and call in today, 833-308-5200. We're going to take a very short commercial break here on Retire Smart Maryland, but don't go anywhere. We're going to talk more in depth about taxes in retirement and a few other things that you should be thinking about as you approach those years. Stay tuned.
Before COVID, we were around 4 or 5 people.
It's a pretty tight-knit team that we have.
But now we are growing and we have about 14 people right now.
It's really 4 or 5 advisors and 4 or 5 support folks, plus an accountant, CPA.
What I'm trying to really create is the family place that everyone loves what they do and enjoys helping the client. My parents, when they had their own company with my father, everybody liked to work because he liked to take care of the people, he likes to help the people, and I'm trying to establish the same thing in our company.
It's very much a team, kind of family-like culture at our company. You know, we hang out outside of work, we care a lot about each other's personal lives as well.
Welcome back to Retire Smart Maryland. My name is Cynthia Defazio, and I'm joined today by Prashant Sabapathi and Ozzy Culhagil of Elite Income Advisors. And gentlemen, obviously we were talking a lot during the commercial break, and we're talking about diversification of taxes, if you will. Ozzy, let's talk a little bit more in depth about that, because I think the viewing audience would be very interested in that subject as well.
Yes, because when you talk with the people and when you start the diversification, most of the time people think about, oh, I have a 50-50 portfolio, 80-20, 70-30 portfolio, so I'm perfectly diversified. Yes, maybe you're diversified in your investment portfolio, but are you diversified when it comes to the tax planning, which, Prashant talked about this? Because when you take a look at it, you need to have different buckets to take the money out. Some of them is going to be before tax, some of them is going to be after tax, and some of them is going to be maybe like capital gains or so forth. So we need to do real tax planning for the future. How are we going to take all this money out from different buckets?
Okay, very good to know.
Yep, and the only thing I would add to that is we go back to that old adage, which is a cliche, right? But it's a cliche because it's true, right? That you don't want to have all of your eggs in any one basket. And so I think what you're saying is right on point, is you wouldn't ever have all of your investments in any one basket. You wouldn't put all your money into a single investment. Why would you put all your money or the large percentage of your wealth into one tax basket, right? Doesn't it make sense to just diversify that out? Because I'll tell you what, we go through different things as we progress through our retirement. When we talk about Medicare, when we talk about required minimum distributions, the taxation of our Social Security, all of those things can be meaningfully improved by simply diversifying the way that our money is positioned from a tax standpoint. And I think a lot of advisors in the industry, particularly the ones at the big box retailers, they don't do a great enough job educating their clients on the importance of tax diversification. So I think it's a great point that you bring up, and I think that it's something that we all should be looking at, ourselves included.
Most definitely.
We should be looking at that as soon as possible.
Most definitely, Ozzy. Thank you for bringing that up. Prashant, what about RMDs, the taxes that can play into that arena, if you will, because obviously so many questions about which account to pull from, what do you do, when do you pull it, but let's talk about the tax aspect on those.
Yeah, so tax aspect, when you get to that age, 73 years old, under current law, you have to take money out of those retirement accounts, right? And so when you take money out of the retirement accounts, you're taking it out of your pre-tax retirement accounts, 401k, IRA, thrift savings plan, 403b. You're taking that money out, and now it counts as income. It's almost as if you earned another income through a job, and that counts as income that could potentially increase your tax bracket, increase the amount that you pay for your Medicare Part B premiums. I mean, it's really a domino effect that really comes into play when you have to deal with the required minimum distribution. So I go back to what Ozzy said about tax diversification. Did you know there's accounts out there, whether they're after-tax accounts or even income tax-free accounts like Roth IRAs, that you do not have to take a required minimum distribution. And you know what that leaves you with? It leaves you with a ton of flexibility. I think it's so important to be able to retire on your terms. When you have an RMD, the government mandates when you take that money out. You don't have control over that. You have to take it out. But when you have a tax-preferred or even a tax-free plan, well, guess what? You created flexibility for yourself. You get to decide when you get to take that money out. You get to decide how to use it, and you get to decide who you leave it to and how much tax they pay on it when they inherit it. Such an important part of the diversification process.
It really is. What a breath of fresh air. I should also ask you, Ozzy, what about capital gains tax? Do you have a lot of clients that come in and talk about that during retirement?
Yes, they do. And, you know, when it comes to the capital gains tax, there is a lot of complexities involved with that because, like, you know, you can hold, you know, stocks, mutual funds, ETF, all that kind of stuff. And when you started to cashing these accounts out, you're going to pay taxes. Is based on the amount that you held that specific position. So it could be a short term, it could be a long term. The short term is usually it's going to be the ordinary income, and the long term is going to be the long-term capital gains. And the long-term capital gains is gonna be percentages based on the amount of how much you're making in the year. So like sometimes the people can make mistakes that they may not know about it. Like they can hold one position for 350 days, and if they could wait for another 20 days, they could do as like long-term capital gains versus a short-term capital gains.
You know what's really interesting? I think back to 2020 during the COVID year, right? And what we saw during COVID was incredible. We saw the market go down big time over the course of about a 45-day period. And what if you bought into whatever stock, we don't have to name any names, but let's say you bought into a stock at the bottom and that stock went up 100% in the next 60 or 90 days when we got the COVID recovery. And you thought, oh my goodness, I just made 100% return on this investment. What am I going to do? I'm going to sell it. I'm going to put that money in my pocket. Well, the issue is now all of that growth, because you didn't hold that stock for a year, all of that growth counted as income. And you know what happens when it counts as income? It potentially increases your tax bracket. It potentially increases the amount that you pay for your Medicare. It potentially increases the amount of your Social Security that now becomes taxable. And I think this is one thing that not enough people really think about. I mean, if there was anything good that came out of 2022, it's that we could tax loss harvest. What I mean by that is you probably had years where you earned a heck of a lot of growth on your stocks. And what we could do is we could use 2022 to sell off some of the stocks that had gains, but then offset those gains with some of the stocks that lost money. And now you created a situation where you can use losses to your advantage, right? And what a great planning tool. Another quick thing before we have to get to the break, we had clients that are business owners. I mean, we have clients that own really successful businesses, right? And one of the things that came out of COVID is that in 2020, when those businesses inevitably lost money because the economy was shut down, we used that as an opportunity. We actually had one of our clients lost some money in her business. And so you know what we did with that loss? We allowed her to do a Roth conversion. Her business lost $90,000, so she converted $90,000 from a pre-tax to 100% income tax-free benefit. And guess what? She didn't owe a penny in additional taxes when that happened.
That's incredible.
And so we took a really bad situation and we made it really, really good. But guess what? If we didn't have that CPA sitting in our office, no one would have ever known that that was the right thing to do. And this is what the value is in working with a specialist. Okay, you might have an advisor. I believe there's a ton of men and women in this industry that are well-meaning, that are good-hearted, but unfortunately, a lot of folks are just not specialized for that distribution phase of your lifetime. Okay, we're going to help get you prepared for that distribution phase if you call into the phone lines. It's 833-308-5200. How many opportunities are out there that you are not taking advantage of simply because your advisor hasn't brought it to you or because you don't know the tax code well enough to actually proactively make decisions? Those are things that we can help you with. Our CPAs can help you with. It's 833-308-5200 to schedule a complimentary, no obligation visit with our team. All you have to do is pick up the phone, make that phone call, schedule an appointment with our team in our Ellicott City offices, conveniently located. We're right off of Route 100, across from the Victoria Gastropub and next to Dunkin' Donuts there. So great location, awesome office, and we have a great team that's ready to take care of you.
Prashant, thank you so much. And Ozzy, thank you so much. I was thinking when you were talking about your business owner that you helped, you had another cliche there. You made lemonades out of lemon. So we're all about cliches today. To our viewers at home, the number to call is on your screen, 833-308-5200. We know that you have a lot of questions about taxes and retirement and how you can navigate through those waters. Prashant and Ozzy are offering you that opportunity today. Just go ahead, pick up the phone and call in. 833-308-5200, or grab your smartphone, click on that QR code at the bottom corner of your screen. That will take you right to Elite Income Advisors landing page. We're going to take a very short commercial break. Don't go anywhere. We're talking more about taxes and retirement. Stay tuned.
My philosophy is that losses hurt more than gains help. And it's all about creating a strong foundation. And in my opinion, that foundation is the foundation of having income that you can always depend on.
Most of the financial advisors focus on the accumulation phase because that's the one who brings most of the revenue to the firm.
I believe that the strongest retirement plans are created with creating a solid foundation for where your income is going to come from, and then building the rest of the plan in as low risk of a way as possible.
That's why it makes us slightly different than other firms, that we focus on the distribution side, not the accumulation side. Distribution side is the most important part of the time because you're retired and you want to make sure you have all the income coming in.
While you're working, you're always just juggling money coming in and money going out. And when you retire, that doesn't really change. It's still very much about income coming in and expenses going out. What changes is where that income is actually going to come from. What we focus on is making sure that we can walk somebody from A to Z through their income, their investments, their insurance, their estate planning, their tax planning, and really wrap it all together in an easy to understand way that truly is focused on educating.
Welcome back to Retire Smart Maryland. My name is Cynthia Defazio, and I'm joined today by Prashant Sabapathi and Ozzy Culhagil of Elite Income Advisors. Great show we're having today, gentlemen, talking about taxes and retirement. This next tax is very interesting because I've read a lot of studies recently for a lot of retirees specifically where they're choosing to move to states that basically have little to no income tax, such as Florida, Texas, Nevada, Delaware, sometimes even North Carolina comes up quite a bit as well. Let's talk a little bit about how do you help people navigate state taxes? What if they don't want to move? What if they want to stay right where they are in Maryland?
Look, I think it's a function of income at the end of the day. We always talk about this idea of retirement is just a function of what we call money in and money out, right? Yeah. It's income comes in, expenses go out, and ultimately that income, after you pay all the taxes, needs to be enough for you to live your most fulfilling life possible. I'll tell you what, Maryland is an awesome state to earn an income. Not exactly the best state in the country to retire in. Yeah. And so, Oz, you could probably talk about this. I mean, how many clients we were just doing an event in Delaware the other day because we had so many clients move from Maryland to Delaware, so we felt like, hey, we'll go out there and see all of our folks.
Because we like to interact with our clients all the time, and we like to see them in our office, obviously, but we also like to see them in social events and so forth. And what we did is we did an event in Delaware, and there was like 20 clients came in, and we had to, put a limit because there is so many clients lives in Delaware for the same reason that you're talking about the taxes. they don't pay the taxes in the state of Delaware because they moved from Maryland. They worked their whole life. They made the money.
Yep.
And just to be clear, Maryland is trying to change some of the
That's
rules,
right.
and they are in the works. It's going to be changed, hopefully, that we're going to be inviting, hopefully, the retirees to state of Maryland. But right now, like you said, the Florida is one of that state, and the North Carolina, West Virginia is like, Texas.
Yeah.
They don't like to taxes people in the retirement. So that's another part of your planning.
Yep.
But this is all what you want to do. It's not about we are telling you that you should move to any of the states.
Right.
But that should be a part of your plan.
Sure, that makes sense. Well, Ozzy, what about estate taxes?
Well, estate taxes, that will be also problematic, that if you don't plan this properly, that your heirs can be ended up with paying a lot of taxes. This goes back to working with the specialists, right? We can't be knowing everything. Like Prashant says, we have a CPA in the office, then helping our clients with the taxes. The same way that we like to work with the different type of attorneys, depends on the client's situation. And these attorneys can provide estate tax help to our clients, because some of the clients, again, the limits are changing. Like there's a huge limit right now, but in 2025, the limits are gonna go down. How is that going to affect our clients and their retirement accounts and all that heir tax? What's going to happen?
Look, I think the thing that scares me to death on estate taxes is right now we have tens of millions of dollars as an exclusion, which means if your estate is under, I'm going to round the number, but let's just say $23 million, $24 million, you're not going to owe a death tax when you pass away to the federal government. But in the last presidential cycle, what happened is there was candidates campaigning on a $1 million estate tax exclusion. Think about that, $1 million. That means if your estate is worth more than $1 million, there's an estate tax, a death tax that is due by your heirs, okay?
Wow.
And so if that number goes back down to a really low number, like $1 million or $2 million, there's a heck of a lot of planning that needs to be done to pay those estate taxes. And so I'm sure we could do a whole show on this, and I'm sure that we probably will in the coming weeks.
Sure.
But look, if you're concerned about estate taxes, if you're concerned about capital gains, if you're not sure what the best state is for you to live in, just give us a call. It's 833-308-5200. We may not have the answer of exactly where you should live, but we'll at least help you map out what those different scenarios may end up looking like, because we have a ton of clients that have moved out of the state of Maryland. It all starts with that phone call, complimentary, no obligation visit with our team. It's exclusive to our TV audience, 833-308-5200. Also scan the QR code and visit retiremaryland.com.
Prashant, thank you so much. Ozzy, thank you
Thank
so
you.
much. To our viewers at home, most specifically, thank you for spending time with us again this week on Retire Smart Maryland. Be safe, be happy, and be blessed. We'll see you back 1 week from today. Take care.